Today is September 15, 2025 at 9:52 a.m. here in the Senate Chamber at Capitol Hill, Saipan. This is the Fiscal Affairs Committee meeting, and I would like to call this meeting to order. And at this time, I recognize another legislative assistant whom I failed to mention earlier, Mr. Devin Macronas. Please, can you please, Commissioner Rocco, to effectuate a quorum?
Present.
Senator Manny Gregory T. Castro.
Stiga.
Senator Francisco Q. Cruz.
Yeah.
Senator Jude U. Hofschneider.
Hey.
Senator Karina L. Magofia.
Present.
Senator Donald M. Manglona.
Present.
Senator Paul A. Manglona. Mr. Chairman, all 7 members are present.
With 7 members present, we have the quorum to proceed with our order of business this morning. And at this time, I also would like to recognize the presence of our presiding officer, Senate President Carl King Neighbors. Thank you, sir, for joining us this morning. Moving on to item number 3, adoption of agenda. I recognize any member to offer motions. Recognize Floor Leader Manglona.
I move to adopt today's agenda.
So move, and it's been seconded. Thank you. And all those in favor to adopt today's meeting agenda, please say aye. All those opposed say nay. Motion carries. Today's agenda is hereby adopted. Item number 4, public comment. This is the portion of the meeting where we allow members of the public to offer comments in today's order of business. Let the record reflect there's none. Moving on to item number 5 under new business. On the agenda for discussion this morning is House Bill number 24-46 HD1, and that is to define and identify general revenues and approve revenues and resources of the Commonwealth of the Northern Mariana Islands as identified pursuant to Article 3, Section 9A of the CNMI Constitution as amended, and 1 CMC Division 7 for fiscal year 2026, and make appropriation for operations and activities of the government of the Commonwealth of the Northern Mariana Islands, its agencies, instrumentalities, and independent programs, and to provide budgetary authority for government corporations for fiscal year to year 2026 and for other purposes. And with that, the chair wishes to invite the Secretary of Finance, the Administrator for OGM, and also the Director of Revenue Tax to please take your seats up. And please feel free to bring your team along to assist you with the guidance or with the answers as pertaining to this this morning's meeting. Okay, so while you take your seat, I just wanted to kind of just to be consistent and to be on record. As I read earlier about the purpose of this morning's meeting, but I would also go ahead and in addition to that, we do have the concurrent resolution that was adopted by both houses already, and on page 2 on line 8 is the total identified budgetary resources for FY 2026 is 179,701,969, of which an additional 4.892548 at a total of 184,594,517, and the 4.892548 is for Department of Public Lands. And then as we move forward, there are some earmarks that were highlighted, ranging from the 80% for MBA, the indirect cost of Office of Grants Management, which now it represents 937,843. The Public Law 1855, 807,000. Admiralty and Maritime Fees, 4,323. Weapon fees, the Public Laws 1973, 23,925. Corporation fees, 135,598. Rev and tax enforcement. On moving on to the next page, they're pretty much zeroed out the other elements that was intended to suspend, with the exception of solid waste fund. 7% of excise tax for CMC subsection 1402G1 at 1.3808046 for a subtotal of 10,374,653. And then we went ahead and identified the debt obligations for 2007 A refunding bond payment, 2007 B refunding bond payment, and the 2024 A pension obligation note at Bank of Guam, and the settlement fund agreement 4681 Public Law 20-23, and that is a total of 41,872,250. And the total local revenue and resources is 132,347,614. Of that, Department of Public Lands, you take out 4,892,548, which brings us to 127,455,066. So that is where the number that we're working with. As everyone knows, the House have already passed their version, and it is before us today. And after a series of selected agencies that were called to testify before the Senate, we're going to discontinue. That puts. Today's meeting represents the end of calling any further agencies before the committee. And just to be just for the record, the reason why we asked the OGM to be here and to assist us with finances, there's a lot of funds that is under the OGM's watch that during the course of the year is able to assist the agencies that are in need. So just in case there are some questions or clarifying questions that needs to be made or being asked by the members, it is the sole reason why we asked, and I appreciate that your presence today. So with that, before I entertain any questions from the members, I would like to just go ahead and recognize the Acting Secretary. Secretary, if you want to offer an opening statement or introduce your team, go right ahead.
Good morning. I would like to thank you and good morning to everyone. I have Dan Alvarez, Pamela Marickman, and Eleuterio Palacios to join me on this hearing. I am sorry I am not really prepared or know anything on that. And I asked Senator Judd if he could postpone the hearing for the question that he might have, because the secretary never informed me on any of this.
Noted, Acting Secretary, and this is basically just not necessarily a hearing per se, but it's pretty much to further clarify some of the numbers that are being proposed for the budget, and also to extend some of clarifying questions to the current fiscal year. So noted on your concern, but we because of the time frame that it's given to us, we had to push forward with this hearing. So I humbly ask for your understanding. Thank you. Any members wish to drive their question first before I pose mine? Negative? Yes. Okay. So I'm gonna go ahead and begin. And this has to do with the Public Law 24-01, and this is the current budget year that we passed earlier this calendar year. So there's some reporting requirements along in the budget, and one being and I'll go ahead and highlight the three most important numbers that we feel it's important to be clarified today: the hotel occupancy taxes, the CIQ overtime charges, and the indirect cost reimbursement. So the Senate and the legislature received the three-quarter reports, and based on the requirement of the budget law. And one of the things that stands out is I don't know if we call it if the discrepancy is the right word, but the variance of what was reported or what was requested on 24-1 or reported to the legislature. And I'll go ahead and read it. It's reported to that the IDC will be collecting 460,126, but as of the third quarter, there is already the actual collection of $1.4 million, 1.423285, the variance of 209%. I wanted to ask Finance or Mr. Cabrera, can you please enlighten us why this understatement of such numbers that is being reflected on? The reason why I asked that, because this represents the fiscal year, and could this be very well the same scenario that we're gonna be experiencing on the presentation on the concurrent resolution on the same subject item? Go ahead, anyone?
Thank you, Senator. Good morning, everybody. To my recollection, I believe what I remember from last year, the 400,000 was provided by the Office of the Secretary, not knowing that how the flow of the reimbursements would come in. It's an estimate. So it's an estimate over time. Typically, in a good year, indirect costs should reach $2.6 million. Typically, but right now it's showing about, I think, 1.4 on the report I gave your office, I believe, for FY25. However, the end of the fiscal year is not yet over, and they have liquidation period to collect, so that's going to be up to like December 31st. So we are still expecting to, finance is still expected to collect more money. We might hit maybe 2.2 million, 2.1.
Okay.
That's my estimation, but consistently it should be between 1.8 to 2.6 million a year.
So,
and given that 35% goes to the grants office and 65% goes to the general fund as every year.
okay, so I'm glad you mentioned that, Mr. Cabrera. So can you qualify again? So let's say, for example, this is the bottom line, the 1.4. Say, for example, today is the end of the fiscal year, and that's the end of the cutoff date. Of the 1.4, how much should be going to grants management?
Sorry, 490,000 straight.
Okay, so the rest goes to
The general fund.
okay. So bringing back us to today with the understatement, no, if that's the rate citation, there's 209% increase. Where does this money supposed to go? I mean, is it appropriate to assume then that this is unobligated funds that is quote unquote being used for something else that is not necessarily a representation of what the budget is, or
Perhaps, I strongly recommend that maybe the Department of Finance isolate a single business unit for that 65% in the budget. Or I think it's about time that we can, because the questions keep coming every year. Where does the money go? What is it used for? But if you give that account number, then every year they can pull out the information.
Correct.
But I can only talk on behalf of my 35%.
sure.
I cannot talk about the 65.
That's okay, and that's why we're here to get a general understanding of such. I appreciate that. I'm gonna yield my next question because I know other members would like to get information. And the reason why we're zeroing in this because this is a substantial understatement. No, I mean we missed it by 209% based on the report that's coming in from finance. So I think we need to look at it closely and make up the best decision as to how we're going to address that for FY 2026. So I'm going to yield for now. I want to ask any of the members if they want to pose their question. I recognize Senator Paul Manglonia.
Yes, thank you, Mr. Chairman. Director, I just wanted to ask, what causes the significant increase? It depends on the total grant amount, and so that's why you have a significant increase of possibly $1.5 million in indirect costs?
Thank you, Senator, for that question. Basically, the faster we spend, the more money we can collect. So this is for the entire government. So if we need to work harder in order to collect those indirect costs, right? Only until you expend, then we can collect, or finance can collect that reimbursement. So like I mentioned in the last meetings ago here, we're noticing that a lot of the projects are construction based. So we don't collect indirect costs of construction and capital assets above 10,000 or vehicles. So a lot of our grants right now are construction based, especially for SCORP, the outdoor recreational projects, solar. However, we did manage to figure out a way to charge a portion of the solar on the professional side. However, there's still a portion that is equipment which you cannot collect indirect costs of. So that could be the reason why it's going down. But in the past, you can see the strength of the government by the amount of collections and the amount of grants. And given that it was a ARPA, right? So, or we had more people to work to spend the money to do project management. Money was spent faster in the past years.
So, the original estimate was the indirect cost was just going to be $605,000, right? So you're working on a 35% of that for your office operational expense?
Sir, I don't know where you got the 605,000. Can you?
Well, it says revised revenue estimates for 2025. That's the original 2025 enacted budget law, right? Estimate.
For our
It's showing here that they have an estimate of 605,000 that you were expecting to collect.
605,000.
Yeah.
So if I were to do reverse math, 605,000 divided by 35%, so the government expected to collect $1.728 million for indirect costs.
Oh, no, no, no. This is what you were expecting to collect in indirect cost reimbursement.
Total?
Yeah, that's what it's saying here.
Um,
I'm just reading from this list.
I believe that question should be directed to maybe finance to, we know what we collect.
I guess my question is, maybe so we can get a sense of your operational expense. What kind of numbers are you looking at on an annual basis?
For our office?
Yes,
typically-
yes.
Typically, our office spends about maybe about 900,000 to 900,000 a year.
So how would you pay for that when your indirect costs times 0.35 is 490?
So given the 19-41, we are allowed to, there's no sunset on the money. It rolls over to the next year. So the more we keep, it rolls over to the next year. So we have extra money rolling over.
So I'm sorry, Mr. Chairman, I'm not aware of that. So the committee has that information. What is
Okay.
the rollover balance?
It's, maybe give me 5 minutes. I can try and pull it up in the computer.
So just a ballpark figure?
The rollover?
Yes.
The rollover can be like 200,000.
Oh, that's it? That's all?
Yeah.
Okay, and what about for so the rest of the 65% goes to the general fund, right?
Yes, sir.
Okay, all right. That's all for now, Mr. Chairman. Thank you.
Okay, so, thank you, Senator Paul. Before I pose the question to recognize the next member, so, Mr. Cabrera, so one more time, so you said there's a rollover. Do you have any recollection as to how many of the, it's a in the legislature, we call it no fiscal year limitation. It's because it's a non-general fund, So can you tell us how much of that is it prevalent that you do that every year, budget year, or is that the average, 200,000, 100,000? I mean,
it just depends, but I can get the figure.
Yeah.
Maybe give me at least 10
No,
minutes.
yeah, just get it to us as soon as. But the reason why it's important, no, that's why we appreciate, financial statements, or when the legislature asks for guidance from you guys, it's important we come forward, because that's also gonna guide us, direct the allocation too, because our job here is not enough when you're just general fund.
Yeah.
You're trying to cut somebody, and here's a pool of money that we can potentially be using to assist. So we get all kinds of requests from almost from A to Z, and we're looking at a general fund, but there's none. We base ourselves on the guidance from finance. So that's the reason why we have this kind of conversation. Please don't take it any other way.
Okay.
We're trying to,
Yes. I apologize, Senator, because the letter for the invite didn't really specifically say, like,
Of course, yeah.
what areas to.
But to your point, that letter also came out since February of earlier this year. So
Thank
we have all that time to communicate in my office. But never, we don't want to go back there. Thank you though for providing the answer. Any other member? Senator Manny Castro.
Thank you, Department of Finance, and for being here. Thank you, Acting Secretary, and your team. Also, OGM. The question I wanted to pose, because the trend, like even in my brief time at the House, some of the issues that come up each budget year, and even if we look at the historical data, it's still similar trends. So my question is, given that we keep missing the mark in terms of our projections, and I know it's a different office that does the projections, but finance has all the data, right? But because we wait for tax to be paid, like for example, the BGR, it it's monthly. It used to be even longer, but they changed it to monthly so that we can collect the funds faster. Or other jurisdictions, such as the Republic of Palau, which used to do like BGR, they kind of like have a hybrid system now. And please correct me if I'm wrong. I know you guys communicate with those regions, but they transition from BGR to sales tax, and I'm just kind of concerned because we always have projections, but then the information is not like as accurate as if we had sales tax where and we improved it where the point of sale is connected to finance. So that's just an example, but is there any other because I know in the legislature we have been looking at it, and I know even late governor Eloy Inos at one point was looking at going that route, but we kind of like never did. What are the disadvantages, like for example, with that example, based on your experience and knowledge, if we were to transition to sales tax where we're collecting it up front rather than waiting for BGR, what are like some pros and cons? If any of you can answer that. If not, it's okay.
Hi, Senator. So, just for clarification, you're justifying sales tax over BGR because it's collected and remitted quicker than BGR taxes?
Not necessarily justifying, but just kind of like looking at that in that way with the proper technology. Yes.
I can't answer that openly right now. Like just off the top of my head, I can't make any general assumptions on which would the pros and cons and which one would be better. I think that's something that requires a deeper dive into the matter and like really analyze the benefits of both, pros and cons. I'm sorry, but I can't answer it right now.
But the department has never looked into looking at the process on how we can get closer to the mark. That's the main question.
Yes, we've looked at other solutions, but we did not consider using a sales tax instead of a business gross revenue tax.
Thank you. I think that's my that's the other is earlier what was mentioned by Grant's office is the more we spend, the more indirect costs we have, and this is something I usually bring up to other departments during the budget hearing, because we have, for example, our last budget hearing, we had a division of energy that said there's $50 million, but they're waiting for there's some issues there, right? And it's just more of a reminder to some of our agencies, the cause and effect. When we delay projects, either we lose it or we get less available to spend. I know a lot of the projects, thanks to late Governor Palacios and other members in the different agencies, who were able to roll out a lot of these projects, but a lot of those funding sources were really old, some of them. So just as a reminder, because I know Senator Paul, for example, is working on some kind of a procurement regulation, given all the challenges that come up in terms of revenue and process. But just as a reminder to all our agencies, including ourselves, like if you saw, one of my bill was to reduce the legislature because sometimes some of the process takes a while. But to look at the macro, like of the issue, because sometimes when we're working in our agency, it's easy to continue to do the same thing over and over, but not really looking at the data or the trend. We had PSS in here earlier, and I did issue them a Open Government Act to see some of their performance measures. At the same time, I'm going to be asking OMB for their for how much money has been given to PSS, because if enrollment is going down, and like for example, then also costs should go down slightly. So we need to be looking at the data and the trends, and also our process. Okay. Otherwise, we're gonna continue to be in the same situation. And I'm not blaming any department. It's just more of a reminder for all of us to transform and evolve. Thank you.
Thank you, Senator Castro. Recognize Vice President Magofia.
Thank you, Chairman, and good morning to the Finance Team, OGM, and Rev and Tax Director. I guess let me follow up with Director Alvarez from Revenue and Tax. You mentioned that there have been some other considerations as far as solutions to try and maybe reduce the gaps in the way the revenues are projected, and I was wondering if you can further expand on those considerations other than the sales tax.
Yes, so there were a couple of factors that went into what we were trying to consider, right? For example, the point that was made about why BGR was changed to monthly versus like originally it was quarterly, right? So it's just like, can we make changes that still satisfy that, where we get the payments right away? There are other, I'm not gonna go into details of what was considered, but then there were other considerations such as, I'm not sure how to explain this, but just other taxes that we can apply here in the CNMI to make up for some shortfalls in the budget projections as far as revenue collections go, right? So we can meet the budget projections. What else? I think that's, without going to what we considered, I don't want to mention that right now, but yes, we.
Okay, totally understand. I guess the reason why we are asking those questions, right, because as we look at the analysis in front of us of what was projected for FY25, and this referring to revenues versus what has been collected year to date, there's some significant variances, very material amounts, and we need to have a better understanding of what's creating those gaps. And I'm sure that that finance is also doing their very best to try and provide more accurate numbers. But I think we've been seeing these variances for some time now, every year actually, and there has to be some solutions to try and reduce the gaps. The ones that I'm very concerned of are the ones that are above 50%, whether it's an increase or decrease. Those are significant gaps that we really need to take a look at and see how we can mitigate those. So I just wanted to kind of get you to expound on that, but if you're not ready to share that with us today, that's fine. Maybe we'll have a separate meeting outside of this hearing to further discuss that. So the next question that I have is for OGM. I know that the chair had asked if you could provide us an average amount of what those rollovers are. So being at OGM for quite some time, I'm sure you don't have to have the specific numbers, but you would have an idea of what those average rollovers are for the last 3 years. So are you able to provide us that information at this time?
I can give the total. The fiscal year budget or total spent or provided or collected Um, 5 more minutes and I'll get into
Okay,
munis.
not a problem.
And then
So
provide-
I guess we just want to understand what the average rollovers are so that when we look at the budget and the shortfalls that are not covered in, the general funds, right, that we could at least have some idea of how much IDCs are available from prior years so that we can factor that into the decisions that we make when we're trying to find funding sources to help the other departments.
I provided a document to Senator Hofschneider's office that shows the annual 65% share for the general fund share and the OGM share. You want me to read the numbers or
I mean,
I can?
maybe if you could share the document with somebody to print it out for us so that we can have it in front of us. That way we can follow, when you are explaining, we can follow the thought process. If you could share that maybe with the LAs or somebody that can print it out for us so that we can
Okay.
share. Thank you. And so, tying that notion to the budget process, right? I would assume that when finance is putting together their revenue projections, that they sit with the relevant stakeholders or departments to get the information as to what the projection should be. So with OGM, I guess let me first start with whether or not the finance had a sit down with OGM to discuss what the projected revenues are for FY26.
To my recollection, that sit down didn't happen. I leave it all up to finance to decide on the proposed submission for the budget.
So how would they, I mean,
It's
how
a
would they
foreca-
know what, it's a forecast,
It's a
but there,
forecast.
it is a forecast, but we also know some concrete numbers, and that's the number of grants that we have and the amounts awarded. So we cannot just say forecast because we actually have evidence, hard evidence of what those numbers should be based on the actual awards, right? And so I know we keep going back to forecast, but there is some level of solid numbers that we can work with. And plus minus 10, I can understand the variance, but when we have a significant increase from FY25 at $605K to FY26 at $2.6 million, that's a significant increase of $2 million. And if you're saying that finance didn't have a sit down with OGM to come up with those numbers, then we're in trouble here. Like, what are we doing? We cannot have finance putting out projections that didn't come directly from the source, because we are relying on these numbers to make informed decisions, and we cannot have this much of a material amount in variance. So, that makes our job so much harder. And then how do we explain that to all the departments, to include PSS, who's trying to get a piece of the pie, right? Like PSS is trying to claim their 25%. If we're saying that the projected revenues is slightly over, $2 million because they didn't have that sit down and discussion with OGM, then we're in trouble here by $2 million already, and that's just one of the revenue projections that we are looking at. Go ahead.
Thank you, Senator. You're right. There should be a way to calculate given a differential variance, but like I mentioned in the past, you need to be able to spend the money in order to make that money, right?
Yep.
So, however, I would like to repeat or reiterate what I mentioned in the past sessions, that indirect costs should be treated separately and as special funds. PSS collects their own indirect costs at 4.5%. So does the hospital. The government, central government, should keep its own indirect costs because we're using the central services pool of finance, procurement, OMB, OPM to do the services for these grants. So, in my honest opinion, they should not. Indirect costs should not be part of the general or dividing the money up with PSS or any other autonomous agencies. It should stay as special funds for the central government.
Okay, and so that's one issue that we need to tackle, right? And obviously, we need to look at the existing law on how OGM was created and how the the percentage that OGM keeps versus what goes into the general fund, because as you clearly stated right now, that you personally feel that it should remain with the central government agencies who applied and got awarded for those grants. And if we're going to touch on that subject, I would like to ask them, because we've had some departments in here who claim that they themselves applied for the grant and didn't get any assistance from your office, but yet the IDCs remain at your office. Okay.
Yes, that is correct. However, the law was created that 19-49 was created that way, and 65% of that goes to
General fund.
the central IDC pool.
First, okay.
So if they don't use OPM to do the application or procurement, or because there is a mention in the budget bill regarding DCCA on page 32, section E, that once DCCA wants to not pay indirect costs. So you're telling me that DCCA should be isolated and they shouldn't get the
So-
services of procurement,
so-
finance?
Okay, so I
Yeah.
get what you're saying, and you're just following the process
Yes.
according to what the law states. And so I
Yes.
guess I should have just been more direct and say, would you support an amendment to the existing law that would state that any agencies or departments who are awarded, those federal funds should keep their IDCs and not give it to the central government for whatever use they deem. So you would be in support for that kind of an amendment?
Well, my answer is it depends, right? Because that would limit or reduce OGM's share 35%, and it'll also reduce the general fund share. In fact, I think I mentioned before that the new uniform guidance, federal, right, 2 CFR, allows for the state to collect up to 15% in IDC per year, starting last October. But we have not, or the government hasn't decided to push on that. So right now we're collecting at the bottom level of 7.5%. If you double that, the indirect cost collected can go up to 5 mil or
Okay.
$5 million.
Okay, I appreciate the dialogue and the explanation that you're providing, and it seems like there needs to be some collective efforts made by all the affected agencies, to include finance, revenue, and tax, and your office, expressing the need and urgency for the money to be expensed as quicker, as quick as possible, because obviously that is probably one factor that's affecting the collections of IDC versus what's projected. So again, maybe just another sit down with the relevant departments, to include yours, to express the urgency, and just a reminder that the quicker you guys expend the funds, the quicker you can collect on the IDC, so that our projections are not so far apart from what we project, right? So I guess I'm done with OGM at this time. If we could just go to maybe finance, and I know that you, Ms. Palacios, you said that you weren't really prepared for this hearing, but if you could, and you have some information, and you were a part of, finance putting together the revenue projections, maybe even revenue and tax, do you know why there's such a huge variance for IDCs for FY25 and FY26? 2 million.
Hi, Senator.
Hi.
So, the projection, so the basis for the projection for FY26 is the FY24 collections, actual collections. And then So that's the reason why we increased the projection for
So
IDC.
I'm just curious because if you're using FY24 actual
Mhm,
collections,
mhm.
right? Maybe, and I'm just
Yes.
talking out loud, maybe some part of those collections from FY24, maybe some of those projects may have already expired. So
Mhm.
why use collections, right? Actual,
Mhm,
and I see
mhm.
why,
Yeah.
you know, there's a good reason to look at the actual collections, but we also
Mhm.
need to factor in whether or not some of those collections are from projects that are probably nearing expiration or have already
Yes.
expired in FY25.
Yes.
So to use it in FY26 would be kind of irresponsible. And second of all, why not just go through all the listing of all the projects currently in FY25 that are not expiring in FY26 and go off of that basis?
Mhm. Yeah, I'm sorry, we didn't go to that route when we were preparing the forecast.
Okay.
But we
Is
will
that the
take that
usual
into
process then? Because this, we're always gonna be in trouble then
Mhm.
every budget year if we're gonna rely solely on what was collected, right? Actual
Yes,
collections
yes,
versus
yes.
actually seeing what's in front of us
Mhm,
and what
mhm.
we anticipate to collect based on actual contracts that we have in front
Mhm.
of us. So maybe that's something that
Yeah, we
you guys
will.
can please take look into consideration for the next budget process, and that way we can have a better understanding of what, or we could be much closer to what we think the revenues are, because we have something in front of us that we can justify, right? We can substantiate it with, but also communicating with all the relevant partners that please, you also need to spend the money, right, as soon as you can, because otherwise we won't meet our projections. So just a recommendation.
Noted on that.
So if we're looking at the revenue projections, and I'm just simply going off of the ones that, like I said, are like very significant. So anything above 30%, it concerns me. We looked at the business gross revenue, and for FY25, it was estimated at 62 million. To date, as of, well, not to date, but as of June 30 of this fiscal year, we've collected 54 million, which is actually a good thing, right? Because we're closer to our projections. But then there was a revised revenue estimate that came in at 46 million, and so that gives us a significant increase of $7.8 million. So what changed from the projection? So we projected 62 million for FY25, but then there was a submission of revised to go down to 46.
So for the BGR, we also consider the business closures. So we got the list from Department of Revenue Tax, and
Okay.
then we calculated how much, since as I said, our basis for forecast is the FY24 collections,
Okay.
and then we deducted all of their
Contributions. Got it.
contribution
Okay.
for that fiscal
Okay.
year.
So that makes sense. When we look at wages and salaries, though, we see an increase of 23%. The revenues that were projected for wages and salary for FY25 was at 28 million, and then there was a revision of 20 down to 20 million, so it increased by 23%. But it doesn't make sense that at least in my mind right now, it's not making sense, because if there was a significant closure, right, of business, how can the wages increase?
So it's the same calculation that we did with those business closure. We also get their total wages, salary tax, and we just deducted it to the actuals of FY24.
Okay, so we reduced the revised, or we reduced the estimated projections for salaries because we
Mhm.
anticipate the closure. Therefore,
Yes.
the revised revenues would decrease, but we've already collected more than what we projected.
This is for FY25
Yes.
Q3.
So we projected 28 million. As of June 30, we collected about
25 million.
25 million.
Yes,
And then we reduced it to 21 million based on the number of business closures that we anticipate. within this fiscal year. Okay. Okay. I got that one. Cigarettes, this one is, huge variance. We projected $12 million for FY '25. As of June, we've only collected 5.3 million, and so the revision, was submitted to reduce the 12 million to 9 million. So what happened there?
Senator, I don't remember all I know is that for the cigarettes, we still follow the FY '24 collections. I don't remember that we made any adjustments, but
So
we
what,
can
okay, so
revisit,
what
yeah.
was collected in FY '24, actual collections?
Let me check out.
I mean, part of the problem, right, when we take the actual collections and use it as our projections is that these numbers are not fixed because of circumstances. So we always have to be mindful of the fluctuations, right, when we're using actual collections, because the economy goes up and down, right? And this creates a huge problem for us when, you know, when it comes to the legislature and we adopt these kinds of numbers only to find out that, you know, it's significantly low than what it should be. And part of that is the maybe lack of, you know, analysis maybe on some of the, I think there should be other factors that needs to be considered when we're projecting revenues and not just solely rely on actual collections. Given the way our economy works, we should always factor in, you know, so there should always be a plus minus maybe in the projection so that we can have some cushion to make the adjustment. Again, just relying solely on actual collections is not really a good practice to go when you're projecting revenue. So just something to take in for the future. So are you able to provide me with the FY '24 collections for cigarettes?
For FY '24, we reported 8.1 million.
So 8.1 million, and then for FY '25, there was a projection of 12.7. And then for FY '26, let's take a look. Cigarettes. Okay, so I see that in FY '26, it was reduced down to $8.1 million, which is much closer to the collection. Okay. So I guess, you know, I mean, we're at the end of fiscal year '25 anyway, so this huge variance is not very, you know, very relevant at this point. It's moot. There's a line item here under various charges for services. The amount is actually just 157K for FY '25, and then a revision was submitted for, and it went down to 118,000, but the collection to date was like 1.3. So first of all, what are these various charges for services, and how did we project 157,000 and ended up collecting 1.3 million dollars? Like, that's a significant variance, which is 1,002% increase. I mean, it's good for the CNMI, but we need to understand what are the anomalies for these types of variances and what's causing them.
I don't have the breakdown right now, but we can provide after
Okay,
this.
that would be great. And maybe just one last one. The line item under Admiralty and Maritime fees, For FY25, the projection was a little bit over $4,000, but as of June 30, we collected $106,000, which shows an increase of, a little bit over 3,000%. So, like, how did we come up with $4,000 as our projection for FY25 revenue and came out with $106,000?
So in the past, I think since we moved to Munis, there was no it was not like a straight up information that we will know that this is an admiralities and maritime fees. So when we were in FY25, our team was really reviewing all of our revenue, and we're finding more items and and tagging them for maritime fees. Yeah.
Okay. But I'm assuming that going forward that we'll have more concrete numbers,
Yes.
right, to work with.
Yes.
Okay. And I'm sorry, one last one. Under poker machines, it was projected at $2.6 million for FY25. As of June 30, we collected $1.4 million. There was an revision submitted to increase to reduce to 1.9. Are we seeing reduction in poker fees? Is it less machines? Like, what's causing that decrease?
Yes. Well, there could be two things that are causing the decrease. When the machines are renewed,
Mm-hmm.
and the other factor could be that you can't purchase any more machines here in Saipan.
Okay.
So if they miss the renewal date, then that's it for that machine, except for Tini and Aroda.
So let's go back to the budget process. So when projections are being calculated, right, do you look at the existing numbers of poker machines, and then when you work on the projections, you look at how many machines will potentially be renewed and how many wouldn't. So are those types of analysis factored into the projection so that we have a better number to work with? Or do we just wait, we just kind of react and wait until it's time to renew, and then we figure out that, these number of machines aren't going to be renewed, or they're, like, I'm just trying to understand, like, what is the process so that we can make those corrections or adjustments moving forward? Because I tell you what, when we sit down here and we start hearing everybody coming at us and asking to, allocate the monies for their, and we really want to help everyone, right? But we rely so much on these numbers. The revenue projection is the key to all of the process, and so it would greatly help us if we could at least get close enough to the projections and not so far off, right? Like, even just $1 million in variance creates chaos, right? And so we're asking nicely, for finance and the team who put the projections together to please, like, take a look at the process that you guys are doing right now, and moving forward, if we can make some of the adjustment to get better numbers for us to work with. Okay, thank you. That's all I have, Chair. Are you?
Hi, Senator.
Thank you,
Sorry.
Go ahead, Director. Go ahead.
Just going back to your first question about addressing the gaps. Looking at the budget projection that the secretary and her team put together, roughly like 60 to 70% of the budget comes from the collection of taxes. I think the quick and immediate action we can take to address some of these gaps is enforcement. And that's the biggest thing. I've mentioned this many times before. The tax administration is lacking in enforcement. And because we're lacking in enforcement, then taxpayers could be non-compliant. And
Thank you, Director, and I'm so glad that you raised that and shared it with us and to the public who are listening in, because I can tell you from my end that I'm always advocating for additional funding for revenue and tax or any other agency that are enforcement that have the authority to enforce, because that is where we rely so much for these revenues to be realized, right? And so I haven't really looked at finance's request as to what additional funding they are asking for to provide the proper amount of FTEs that your division needs. But I can assure you that, when we go into deliberation, that is definitely one thing that I'm always advocating for, is to look at the enforcement agencies that are helping to generate all these revenues, and let's see if we can focus, some of the appropriations to those departments, not discounting all the other departments that are coming in, but without these agencies who are enforcing and collecting, we can't meet the projections, right, or even come close to it. And so I am hoping that when we meet with the Secretary of Finance and OMB, that we can get a listing of what revenue and tax needs are, so that we can take that into consideration when we deliberate. Thank you. And I hope you've already submitted your, not demands, but requests to the Secretary of Finance. Thank you. Thank you, Chair.
Mrs. Masi, Vice President Magofnia. Just staying on point, Director Alvarez, there is current, it's for CMC Section 1503, that's the Rev and Tax Enforcement Statute, to which there are some, that's a vehicle that we can probably revisit to address your point about increasing allocation for Rev and Tax. Okay, so with that, I recognize Floor Leader Maglonia. Donald.
Thank you, Chairman. My question is for OGM. Just clarification on the IDC. You stated earlier that any amount received in excess of what was appropriated to the budget gets rolled over. Is that correct? Is that my understanding?
For our office.
Correct. So, in fiscal year 2024, the actual collections was, I guess, similar to what's being projected for next fiscal year, which shows your office is expected to receive 75,000 more than what was appropriated. So would you say that 75,000 should be going over to your office, or is that a figure that needs to be appropriated separately, or how does that work?
Is it based on the 605,000 that we're
Based
talking?
on the fourth quarter report from the Secretary's office, the actual collected IDC was at 2.68 million, and we've only appropriated through the Budget Act 862,000, but you're supposed to receive 937, so that's a $75,000 variance. So what happened to that money?
To conferring with finance, the money's being transferred to our office, or has been transferred.
But how shouldn't that be restricted until there's an appropriation?
Is the way it works is, they receive the reimbursements and we just multiply 35% and then they make the transfer.
So what's the point of putting it in the budget if you may receive more than what is appropriated in the budget?
I don't know, sir. I'm not sure.
Has that been a practice, finance, with if OGM receives more than what is appropriated through the Budget Act? Am I making sense? Because if that's the case, we should just strike out the whole process of putting it in the budget if that's the case.
That is the case for the
Okay.
last 9 years.
Okay. And so you've already used up that 75,000 from last fiscal year?
Yes, sir.
Okay. My question is for finance. With the provision that was included in the House's version of the budget bill, which authorizes or provides for an exemption for law enforcement to receive a lump sum if they were to separate from the government, do we have the money to pay those out if that's the case?
Hi, Senator. Sorry, we don't have any information about that.
Okay,
Right
but
now.
if there, so whenever all these accrued leave hours, is that budgeted for like within the fringe benefits, or is there a separate funding source that would pay those out if ever that were the case? For any annual leave that is not used?
We're not sure on that. Where's the funding coming from?
But in the past, the practice of paying out annual leave, how is that normally funded?
It's based on the bottom line of the appropriation, whether they have enough money for
So that the department has enough personnel funds to pay out someone's annual leave?
the loss.
That'll be how.
Stand by.
That is all I have for the first round, Chair. Ayu.
Thank you, Floor Leader Maglonia. I think Mr. Cabrera wished to make a comment on that.
Yes, I have a statement based on Section F, page 32. While I support the intent of this section, which addresses lump sum annual leave payments, its scope should not be narrowly limited to enforcement personnel. In the current sluggish economy environment, broadening the eligibility across the agencies would serve multiple objectives, stimulating local economic activity, reducing the government's long-term leave liability, and promoting equity among public servants. In past, this idea has been, we talked about this for like 5 years already, about the lump sum payments. Typically, after you're talking to Treasury, it's about a $5.5 million across the board for all government employees, if we were to pay out 160 hours in annual leave. However, it's based on enforcement according to Section F. I did some studies. The return on investment to the GDP will be about 11% if we are to pay out the 5.5, and to the employee compensations about 16%. So what I'm trying to say is, if we open it up to all the other government agencies and not only enforcement, we can probably collect about $1 million more in revenue. Do not just limit to enforcement. What I do know is that enforcement gets a special set aside from CIP. I don't know if you know that. About $3 million annually for the past 2 years, if I'm not wrong, goes to the payment of enforcement on Saipantinian and Rhoda, which is 30%. So typically, if they were to, they can pay out that leave if they choose to, using that mechanism, or an offset from the local and from CIP. But in fairness and in parity, can we just open it up to entire government if they have the funds? Because it'll stimulate the economy. You're pumping in 1 month extra in pay into the economy. That's big for a sluggish economy.
Thank you, Mr. Cabrera, for your insights on that. Our problem is the liquidity of our government is suspect, and I'm glad to the point that staying on discussion, and thank you for enumerating the CIP, the access that we can use. And to this date, right now, our police officers on Tinian and DFEMS, they're behind 8 pay periods of overtime because there's no money. So I'm not against paying outs and all that, and I'm all about helping our people, but if we're trying to be generous in providing provisions like this, and we have this other spectrum of obligations that we cannot fulfill. Mind you, it's from previous pay period. And then we're also looking at our hazardous pay for our solid waste employees. We haven't been paid since 2023. So liquidity is our problem, or either liquidity or policy, or the execution of who do we pay first and who do we not pay for the next 4 years. So that's our issue here in the legislature, in the government. That's why this is a good conversation, and I appreciate that you bring this up, because it just gives us even more, a greater understanding as to how we're going to craft this budget out. And if we want to be, maybe fair, maybe some say fairness and equitable is synonymous. I say I'll use the latter. Tanafang pareho todos. If we can rest at least 50% of what we owe them, let's give them, because they all need the money and they also perform. And also we need to work with OPM with regards to this proposed provision, because in my recollection, all the years in the government, when you separate from the government, that's when you access the lump sum. So this particular provision is, if I missed it last year, then that's on me. But I'm glad that this is raised up by Member Donald, floor leader. But I just wanted to circle back on the statement made earlier. I'm a proponent of retiring debts owed to our people. From the Public Law 7-31, I took part on that one. We retired that finally with the infusion of cash coming in from the now defunct gaming industry. From that to the salary increase, the much needed salary increase the last 5 years. I believe there's that provision that we raised the ceiling of the government employee. You see that? Remember when we we raised the classification and also the pay scale? You recall that, right? You were in the government already. So those are the efforts that we've been doing through the years to try and help our people. So coming back to this discussion, Mr. Cabrera and Secretary of Finance, I cannot ask even anything more than to let's retire those obligations, and then we can start thinking about. And I agree with you. The more we pay them, the better for the GDP and the buying power of our people. And I'm 110% agreement with you. But at the same time, I have difficulty understanding that we're trying to provide this opportunity, but at the same time we have these people that have been waiting. And believe me, we're contemplating on putting that in this budget. I'm gonna ask my colleagues. Because it's only important that we retire those before we move to the next one. I'm gonna refrain from saying further. I do know the Senate President is giving me the cue. Did you want to say something, sir? Any other members? I do want to give you guys a heads up that we do have mandated time to recess, which we're not gonna adjourn this committee meeting. We're gonna recess at 11:20, and then I respectfully ask that we come back 1:30. Or we can recess until until further notice. But I will notify you. I ask that you please work with us, because we're tightening this product from the Senate, and it's only important that we understand it fully. Because in this budget product, there's going to be some provisions from the Senate that we're going to add, and I need your guidance. But I think, I want to recognize for the first time
Yes.
Senator Cruz. Go
Thank you,
ahead.
Chairman. I just want to ask, finance the developers tax, infrastructure tax. Is this just Saipan alone, or the whole 3 senatorial district? I know it's an increase of, says 32% increase for
Yeah, that's
the
for
proposed
all
policy?
3 islands.
3 islands.
Mhm.
So you guys don't. Is this the actual collection, or just an anticipation?
That's the FY26 forecast.
Yes.
That's based on the FY24 collections.
Okay. Now, you guys don't don't segregate the senatorial because this is I'm glad that it's not on the budget because I've seen this couple of times and it's not supposed to be on the budget because this is a special fund and I just wanna know why you guys compiling in one supposed to be separated because by law each senatorial district local delegation will be the appropriate body for such funds. I don't know why you guys are putting it into one. How can we know and how much each senatorial district will appropriate for the needs? Is how you guys work on in developers tax? Is just one account?
In our system, it's there's different project for each senatorial district, but for the purpose of this report, we combine.
Okay, so
the three of
you
them.
have a separate.
Yes, yes. I just don't have the
So
information.
can I
right
ask how much for Tinia?
now. I just don't have the information right now. Yeah, but I can provide that later.
Oh, okay, thank you. Are you back, Mr. Chairman?
Okay, thank you, Senator Cruz. Senator Poe, I'm going to recognize Senator Colville first for the first time. Senator Colville.
Thank you, Chairman. Yes, and I know our Vice Senator Karina mentioned about how are we going to get together and close in that revenue gap is in regards to revised the estimation portion. I just want to recommend how you were mentioning 24 fiscal year 2024, knowing my just elementary math and mean, median, and mode. If we may look back, not during the COVID era, probably like we're looking where we're getting out of there the last 3 years, 24, 22, 23, to get that average aggregate, versus just reflecting on one fiscal year. Because that dynamics really, when our fiscal analyst shares the numbers and shares the favorable projections, like they say, we want to be in the marking zone of you're off by at least 25 to 50%. But when you're looking at you're in a negative of 100 plus to 200% off, it skews the data. So we're hoping that that recommendation on in regards to getting the average would be helpful. And there's other factors, and I mentioned we need to support the lack of enforcement, the compliance load. There's funding out there, but it's probably not being reported or what due to the lack of enforcement. So those are the two areas, and also the CIP, not the CIP, the grants to Mr. Epi and the team. But thank you so much. Thank you, Chair.
This is Masi. Senator Colville. Recognize Senator Paul.
Thank you, Chairman. Just actually a quick question to AP. I'm just wondering, are you working with our Medicaid office as far as getting federal grant? I understand Guam recently got a APD, Advanced Planning Document grant. Is that something that we're getting or we're near there? Because my understanding is that grant can also be used to kind of like supplement. There's somewhat flexibility to supplement our Medicaid office, and at the same time by improving our data system there, maybe it will ultimately help our CHCC, right? Because we can also maybe help them process their billings faster so they can get Medicaid funding. Are you working with them? Are you familiar with this grant?
Yes, I'm familiar with that topic. However, we leave that with the agency to push out.
So are we getting grants for that this year, or at least for the coming fiscal year?
I recall that they possibly maybe terminated their contract with the Hawaii-based company, but I'm not sure whether they found a new one. You will have to talk to the director, Mr. Cruz, George, right?
But
he will be,
because I understand this grant might be 20 million or more, and if we have that grant, we don't really need to
I think
budget for Medicaid that much.
that grant is for informational technology, right? Like the
Right,
computer
right.
systems and upgrade. Yes. We did speak about it before, but the directors keep coming in and out, right? They keep changing. That at that period when we talked about it with them, maybe that's like 2 years ago. So there's a new director there, so he hasn't reached out to our office yet, but I'm sure that they're trying to figure out a way to capture that grant.
So there's
available.
really no communication between Office of Grant Management and Medicaid. There's no really direct communication.
Very little, very little.
Well, I know that this is talking about revenue here today, but can you just get together and maybe get a report to provide? I'm the new chair for health, and I really want to look into that. So I appreciate. I understand he's off island, but to get together with George, the director, and kind of like let's get a plan for the CNMI so that we have a lot to discuss under the Medicaid issues. Thank you, Mr. Chairman.
So Mosi, Senator Po, members, I respectfully ask that we take our recess now. This is appropriate time to take our recess for that important meeting. And I also would like to ask you folks if we can come back here at 3:30 in the afternoon today to wrap up some of the line of questions and the discussion this afternoon or this morning. Okay, with that, thank you so much for being here. And this meeting stands on recess until 3:30 this afternoon. Thank you.